Here broadcasting live from Las Vegas, Nevada. Fear is going on. Fear is out there. It is crazy. Prices are going down, assets prices everywhere, recession fears, all these type of things. Is this all warranted, or is it just an overreaction? And in this video, I'll dive into some of the data. I'll show you some of the hard data from official institutions like the Fed and others like the Fred system run by the Fed, and give you some more details on how others see it, some more details about the cash levels that Warren Buffett holds, all these type of things. So I go into all these details, give you the background and the hard facts so that you don't have to do it. So if you like videos like that, don't forget to give me that like button, subscribe to my channel, and by the way, it's all for points on Xandeum here. So let's dive right into it. So first of all, the VIX, the volatility index, which measures the volatility that we have in asset prices, in this case, in the S&P 500 index. In my last video, we were here, and I was already telling you, well, you know, volatility is going crazy. But today, we're here. So it went up all the way here to 30 or so, and now it's back to 23, and that was by Friday evening here, right? So this was Friday at market close. Volatility is going crazy. So what does that mean for Sol? For Sol, look at the Sol price here, right? We were just a week ago at 193, right? And going back to the low point here just recently at the time of this live stream, we're at minus 31% in just 6 days, 11 hours. 6.5 days, minus 31%. That is a lot by any measure. It is really, really a lot of money and a lot of wealth destroyed here in that short amount of time. So why is all that, right? It's all because of recession fears, right? Recession fears because some industry indexes went down, some labor market numbers were not as great as we hoped for. And in my last video, I told you, well, it might just be an overreaction, and I still feel it's definitely an overreaction, but that does not mean it'll go away next week, right? It just does not mean that. So we need to look into what's the likely scenarios over the next 12 to 24 months. What does it mean for your portfolio? And of course, nothing in this video is financial advice. I don't know your personal situation. This is just for entertainment purposes and to give you my perspective on things and to share my research with you so that you don't have to do it. So, looking into some of the scenarios here, right? Going back to this here, and this is Fred, right? Fred is the Federal Reserve tool to give us some data, right? So this is official data collected by the government, and what we see here is the spread between the 10-year Treasury yield and the 2-year Treasury yield, right? Normally, that spread is positive, meaning, you know, 10-year interest rates are higher than 2-year interest rates, right? That's what I learned when I was young. I had, lock money in for a short period of time, I get little interest. I lock it in for a longer period of time, I get more interest. And the same would be true for loans. I take a loan for a short period of time, low interest. I want to lock in my interest rate for a longer period of time, I pay more interest. So that being here above the zero line is kind of normal, right? When it's below the zero line, right? When the 2-year interest rate is higher than the 10-year interest rate, then we have what's called an inverted yield curve. And you might have heard that term, inverted yield curve. a lot of times, and it's, you know, widely considered to be an indicator of a coming recession, right? It just means that, you know, the yield curve inverts, and then at some point we get a recession. And as you see here in this diagram, that is quite a reliable indicator, right? So we had that here, the yield curve inverted about this time, and then boom, we went into two recessions here, right? Then we were in good territory, all positive, and then when was this here? 1989. I remember these days. We went into negative territory, not that much, but a little bit. So the yield curve inverted, and then about a year later or so, we had a recession, right? But before the recession started, we went back into positive territory, right? So if you really look at this scenario here, you see that, well, you don't see it here, and you don't see it here, right? So here, there was no kind of disinversion happening before the recession. But here we had a disinversion before the recession started. Here we had a disinversion, and then the recession started. Here we had a disinversion, but there was a longer wait, but then the recession started. Here, oh, it was really, really brief. We only had a very, very brief yield curve inversion, and then some time later, a recession started. So what happened then? We went into negative territory here, inverted yield curve for such a long time. And I remember these days here, that was June 2022, and everyone said, wow, the yield curve is inverting. There must be a recession coming soon. So that's now over 2 years ago. And for 2 years, no recession came, you know. So everyone at some point thought like, oh, the Fed might be doing great. They might do what's called a soft landing and just manage interest rates so well that we get out of this without having a recession. But what's happening now here, the last few days, the last week, is we're getting very, very close to that disinversion here, right? And how is that possible? This disinversion just means that people feel the interest rates stay a little bit high in the next 2 years because they are high right now. You know, the Fed missed the opportunity to cut rates in July, so the next opportunity will be in September, but you know, by mid-September, 17th or 18th is the next Fed meeting. So that would be the next ordinary opportunity for the Fed to cut rates. They could do it before that in kind of an emergency measure or something, but they would really, really create a lot of uncertainty in the market if they did that. So my bet is they won't go that route, right? They will just wait until September. And then they won't cut like crazy, right? Most likely they will start with a quarter point, right? 25 basis points, because if they did otherwise, again, it might trigger a panic in the market, right? So they might be doing like 3 cuts this year of 25 basis points each. So that will bring down the interest rate slowly. So that means the market assumes that over the next 2 years, we still have relatively high interest rates, but the market also anticipates that after those 2 years, maybe starting 1 year after today, we're going to be back to real, real low short-term interest rates. So that will bring down the 10-year Treasury. And by the way, mortgage rates have already gone down massively in the past week. So yeah, so we're going to have that disinversion. And then some people say like, you know, when we have that disinversion, then usually it doesn't take long until we have a recession here. And that might very well happen, right? It might very well be that the Fed kept interest rates high for too long. I personally, you know, was silently thinking like, well, maybe they cut rates already in their July meeting. They missed that opportunity. I think it was a mistake, and maybe did they have the data that came out a few days after? They might have cut rates. I'm not sure if they have the data before we have them, right? Likely. But they should have cut rates, I feel, right? We really risk now. They kept it too high for too long, and we're going into a recession. But otherwise, on the other hand, think about that data, right? It was just 2, 3, 4 data points. It was just a little bit of unemployment and jobs creation data. And, these fluctuate, right? It was one reading. They fluctuate and they get corrected retroactively so often, especially the last few months. So there could be a recession. There could be a very short recession. I personally don't think we go into an extended period of recession here. But you never know, right? So what does recession actually mean? And will we get a recession or won't we get a recession, right? So we have other indicators here. We have Warren Buffett selling a lot. He sold almost 50% of his Apple holdings in the last few weeks, or in the last quarter, I believe. And he has a new record. The previous record of his cash pile was 189 billion, and it's likely going to be over 200 billion. Some other sources say 277 billion. We're already there. So then we could argue, why does Warren Buffett do that, right? So we have that here. 189 billion was the previous high, and over 200 billion. And why does Warren Buffett do that? Well, there's two things. Either he could anticipate the markets going down, so he goes out of stocks and goes into cash to take advantage of that. On the other hand, he's not really someone that times the market, right? So that's what's driving me a little bit crazy about Warren Buffett. He taught me buy and hold for the rest of your life, right? And then with the pandemic and airlines, he started to break his own rules, right? And just sold the airlines less than 1 year after he purchased them, right? And with Apple now, he's also trying to time the market. So in my view, Berkshire Hathaway is more and more just like a regular mutual fund or stuff like that, right? They don't have that special strategy anymore that they used to have, and they don't have special returns anymore as they used to have in the older days. But still, they have the highest cash pile now. It could just be that Warren and Berkshire Hathaway doesn't see any opportunities here of stocks that are especially cheap for them to buy into. And while there are always cheap opportunities out there, he needs to have opportunities in the tens of billions at least, hopefully hundreds of billions, to make any difference for his company, right? If he buys up a company for 350 million that could 10x, that's great, but it doesn't, make much of a difference if he already has 277 in cash alone, right? And assets under management is way more than that. So he needs to find these companies, and he has reiterated so many times that it's bad to sit on a pile of cash. Maybe not these days, because he gets a lot of interest rates for treasury bills, right? So it's not that bad to sit on cash these days. And but it's bad to sit on cash, but it's way worse to just invest in something just because you feel like you want to invest and you don't want to sit on cash, right? It has to be a good investment. And he just might not see any out there. So it doesn't have to be that he is super fearful and thinks a recession is coming and everything. Also, he's always saying, be fearful when others are greedy, and be greedy when others are fearful. So right now, everyone's fearful, right? So, so that's another indicator. Then there's a funny one, right? It's Meet Kevin here, a guy on YouTube and X that I follow. and this is a crazy thing here. So he says, Jim Cramer, when asked, "Are we going into a recession?" he responds, "No, of course not." And that he puts that with a rest in peace a gravestone here. And the background behind that is, the saying goes, if you invest and always do the opposite of Jim Cramer, then you're doing the best, right? It's really like what Jim Cramer predicts. Most likely the opposite will happen. So if he says, no, of course not, we're not going into a recession, maybe we are going into one, right? And the risk is really there. The risk has become a little bit higher with the latest data. But the reaction that we're seeing in the markets right now, to me, definitely it's an overreaction. It doesn't mean it'll correct itself in the next week, right? People might just keep overreacting. Another great question here of Meet Kevin. Look at that, 21 hours ago. Are you buying the stock market dip, right? Because that's the general advice here, buy the dip. Oh, by the way, I didn't show you that here, what I talked about, right? It was, yeah. So, are you buying the dip? And here's the poll, right? 6,511 votes, 2 hours left. 44.7% that yes, buy the dip. So this is a typo here, right? Yes, they're buying the dip. 34% I'm holding, and only 21% say I'm selling. Well, that's Meet Kevin's audience here. Maybe they are all optimists. I'm not sure, but it says something, right? And I'm definitely buying this dip because I still feel it is, worth. The recent data is worth looking at. Your portfolio again, and we might have been a little bit over optimistic before that, but having this heavy crazy reactions that we've seen the last few days, it is an overreaction, right? But overreaction, sometimes they feed themselves, right? Most of the trading these days is automated. And if it starts going down, then portfolios get liquidated, positions get liquidated, and it can feed itself, right? And nobody knows how long it's going to take. Nobody knows what's going to happen with the Fed. I think if the stock market really crashes or something like that, maybe they might have to do something before the September meeting, which is still almost like 6 weeks out, right? They might have to do something. It is then the question, how will they communicate that without creating some more panic? And then this is a channel that's also a lot about Solana, right? So let's look into what's going on in the Solana market. And in concurrently with all the bad news on the economy here, we had this guy here, DB Crypto, publishing a video with all the negative sides of Solana, and it's exposing Solana, everything they don't want you to know. And it's like a 40-minute video or something, right? And I wouldn't bring that up if not some of my audience here came back to me and said, hey, Bernie, what do you say about this, right? And I might come up with a full kind of counter statement of this one. But hey, this guy is citing Mr. Bonds, who has been known as a Solana critic and Ethereum maxi for a long time. And I listened to most of that video. I didn't dive that much into the details. Most of what I'm hearing is like, well, there are so many like trading pools and apps on top of Solana that have misreported something, or they, then most of the volume was in 2 apps or stuff like that. Yeah, Solana is a permissionless piece of infrastructure, right? Anyone can do anything on this, right? Anyone can create any stats and say, there has been whatever, a lot of this stuff, right? And the same thing happens with the internet, right? So on the internet, you have so many apps. Some of them are fraudulent. Some of them are fraudulent, right? Some of them create a lot of traffic, and then someone comes up and creates a statistic and says, wow, internet traffic has increased. And then, a few months later, we found out, whoa, it was just one app that did something illicit or something like that, right? And it all happens. And I think up until this day, most of the traffic on the internet is porn related and stuff like that, right? Is that a reason to say, oh, the internet is crap? I don't use the internet anymore. I don't invest into anything internet or something like that. Of course not, right? It's just a piece of infrastructure. If you have a piece of infrastructure that is low cost and the internet is low cost, Solana is low cost, you have all sorts of people on there that do this stuff and that stuff. And some people publish this sort of report and stats, and others do this and that. And yeah, there might be lies. I've heard that story again when the Solana founding team lied about the supply in the very early days. Maybe they did, maybe they didn't. I couldn't really find out if it's true or not. But I see what's going on in Solana. I see the passion that the founding team is driving this forward, and the passion that they have in there to make this thing great, to solve all the technical problems, to make this a great piece of infrastructure that is low cost, that is permissionless for anyone to use, and that's what I see, right? And maybe they've misstated something. I would probably feel like it was accidental. Maybe it was accidental in order to achieve a goal, right? But yeah, it happens, and it's not like they have certified something or so, and it might have just been a statement, and it happens all the time, right? All our politicians make like 7,000 lies each and every day, right? And some of them even get elected to president of the United States, right? So yeah, I didn't hear, it sounds like I'm downplaying stuff here, but somehow, you always have bad publicity on anything successful out there. Microsoft has a lot of bad publicity. Facebook has, Twitter / X definitely has, and yeah. So I didn't hear anything in this video that would kind of change my view on Solana that I have so far. If you guys have any specific questions of what that guy is saying, and if that's like, feels like we're building on sand here, if we're building apps on Solana or something, that is, of course, absolutely the wrong conclusion to draw here from that. But if you have any more questions, just let me know, right? So what's the essence of all this, right? I mean, we're here, right? Solana, I mean, it has been coming up here. See that? It was at 133. We're now back to 137. Let's see how it develops. I think it's an overreaction. The overreaction might feed itself, and it might take a while. It might even take until after the recession, if one comes, that we're going back up again. For me, it just, for my Solana holdings, it just means I'm holding. Might even buy some more, even though I'm almost over invested into, I'm really heavily invested into Solana. But there is lots of opportunities out here that might be great to buy here. Tesla is back to 207, as you see here. Nvidia is down to 107. Google to 168. There are a lot of nice opportunities here. Maybe I'll even buy some more ore here. I did at about 900 or something. It's 735 right now. So that's a big candidate for me for buying. And yeah, so it's a time of high uncertainty for the markets. For us, it has always been here at Xandeum. We've had way higher volatility, right? We started out when Solana was over 200 and it went down to $8, right? And I'm so happy I bought a lot, and I recommended that on my channel of buying, and I think it was at $11 when I bought most of mine, which is still great at 137 today, right? So, and we've always been like, we're building. We here at Xandeum, we're building a scalable storage layer for the Solana chain. I think it's going to change the world. We're going to be in Singapore at the Solana Breakpoint event real soon, by late September. If anyone wants to meet us there in person, just be there. We're one of the sponsors. We have a booth there and everything, so we can meet up in Singapore. And we just keep building no matter what the market is saying. And yeah, we're kind of, I'm kind of glad these type of corrections happen from time to time. It was almost like too much exuberance that we had the days before. It's coming down here, and it lays the groundwork to another rally. And we will all see, with the next economic data that's coming out, whether this will lead into a recession here, or whether we will be able to navigate this here. And yeah, I'm, yeah. And if it always goes up, that's not a good story anyway. So I hope I've given you a lot of details here, and a lot of different angles to look at the current situation, with the economic data coming in, with the interest rates and the future development of the interest rates, with companies like Berkshire Hathaway and their cash piles, and with public figures like Jim Cramer. So I think this gives you a quite rounded overview of where we are, and it doesn't take away the uncertainty, unfortunately, right? We live with uncertainty these days. That's why the volatility is so high. Volatility is great for traders. So if you're into trading and timing the market, it might be a great time. And yeah, I hope you've learned something here. Thanks so much for watching, guys.